everybody. A very good day to you and welcome to the first of Rethink's mini podcast series, where we will focus on corporate tax and all you need to know about its introduction to the UAE. We will cover in as simple terms as possible what corporate tax, or CT, get used to the acronym, is, why it's being introduced, who it will apply to, the inevitable cost implications, what aspects of your business will be impacted, and what you should be doing right now to prepare. My name is Neil Guthrie. I lead the finance and tax team here at Rethink, and I'm delighted to say I'm joined by Kirti Vudamudi, who's our Director of Tax.
Welcome, everybody. Have a good day.
So you'll all remember that in 2018, the UAE introduced VAT, and it swiftly followed that up with the introduction of economic substance regulations. And at the beginning of 2022, it announced it was going to introduce a corporate tax. And in December the 9th, in fact, it published the legislation for its introduction in 2023. Now, whereas VAT was very much and is very much a revenue generating initiative, ESR and the corporate tax are part of the UAE's commitment to the OECD's BEPS initiative, designed to introduce a fairer and more transparent tax regime internationally. So what is BEPS? You've heard a lot about it. BEPS stands for Base Erosion and Profit Shifting. So CEOs, CFOs, tax directors, etc., of multinational enterprises tend to be a clever bunch. And of course, they're motivated by maximizing shareholder returns. And one of the ways they can do this, of course, is by minimizing a group's tax bill. So they're constantly in search of legal ways of reducing or eroding the base for tax in high tax regimes and shifting profit from high tax regimes to low tax regimes, regardless sometimes of the substance in each of the jurisdictions. And one of the key ways that they can do this is intergroup transactions at non-commercial rates. And this is the primary driver for the introduction of transfer pricing in the UAE's upcoming corporate tax legislation. And the emergence of internet behemoths such as Google and Facebook, of course, have turbocharged the need for change. So that's a little bit about the background. Kirti, can you tell us how the UAE's corporate tax regime is shaping up to be compared to that of other leading economies?
Sure, Neil. Thank you very much for the detailed introduction. It was really helpful. As you mentioned, the law is made public only on 9th of December. And from the law, it is very clear that the legislation of the UAE corporate tax regime will closely align with generally accepted tax principles as adopted by most developed countries. These international tax principles are familiar to tax experts, so UAE CT is expected to be easily adopted. With such a familiar and competitive tax regime and a wide network of double taxation treaties, the UAE will cement its position as a leading jurisdiction for business and investment.
Great, that's great. Now let's go back to basics a little bit. Can you tell us what corporate tax is?
Sure, I'll keep it simple. In the context of the UAE, corporate tax is a tax on the profits of a business. Taxes are paid on businesses' taxable profits, which is effectively its revenue, minus all costs that are allowable under the legislation. How taxable income is computed is a broad subject. We will cover that in detail in a future podcast.
Great, that was a useful refresher. So when will corporate tax be introduced and at what rate?
Sure. Corporate tax will come into effect starting from financial year beginning 1st June 2023. The businesses with the calendar year as financial year, let's say January to December, the first financial year that would be subject to tax for them would be 1st January 2024 to December 2024. To answer your second question, it will be introduced at a standard rate of 9% of the taxable profits exceeding a certain limit. a threshold. The threshold is not yet confirmed in the regulations, but based on the public consultation document and the FAQs, we believe that the threshold will be around 375,000 dirhams or even more. It will be confirmed over a cabinet decision shortly. Taxable profits up to this threshold, presumably 375,000 dirhams, will be at 0% for all the entities. Free zone entities which comply with certain terms and conditions will be able to take an advantage of 0% rate, tax rate, just as promised by the Free Zone Licensing Authority. There will be a separate regime for large multinational entities with a global turnover exceeding a threshold of 750 million euros, which is approximately 3 billion dirhams, aligning with Pillar 2 of BEPS. Now, there is no reference to global minimum taxation within the law, which is published on 9th of December, but the public consultation document and the FAQs and UAE's commitment to international tax practices indicate that there will be a global minimum taxation right after it being implemented internationally. Although a 9% tax rate is a significant additional expense for many businesses, still it is the most competitive tax rates in the world.
Okay, that's great. So who's going to be subject to corporate tax?
Sure. Whether you're a free zone entity, a mainland entity, an incorporated entity, or an unincorporated individual conducting a business or business activity in the UAE, or indeed a foreign entity conducting business in the UAE on an ongoing and regular basis, you will be in scope for UAE corporate tax. The Ministry of Finance will release a decision in due course specifying further information as to what would bring a natural person within the scope of UAE corporate tax. Now, I said natural person being subject to corporate tax. This itself clarifies that the UAE corporate tax regime in actual sense is not a corporate tax. It is actually a business tax. The definition of business in the corporate tax law is quite extensive, and it is in line with the VAT definition, the definition of business in the VAT law.
Thanks for that, Kirti. So this is where I sort of act as devil's advocate a little bit and ask the question, is CT, corporate tax, really a priority? Obviously, businesses, CEOs, business leaders, they have a myriad of priorities at any point in time, and they're probably thinking to themselves, 1st of June 2023 is the financial year when the first companies will fall into the CT net, and most companies have financial years beginning the 1st of January. So they're going to be saying, well, 31st December 2024 is the end of the financial year, and 9 months after that, I have to submit a tax year. So it's going to be well into 2025 before I have to submit a tax return. So why should I concern myself about corporate tax at this point in time?
Well, it would certainly be understandable for businesses to think this way, but let's not forget, we are already in 2023 and the businesses will have to be ready for the start of their financial year. This could be June 2023 for some companies, some businesses, or for some, it would be January 2024, but they will have to be ready before the start of the financial year, and there is very much less time to address the issues than they would foresee. Corporate tax will have significant and far-reaching impact on businesses, which is likely to take months of careful planning and structured action to address.
Absolutely. And the key message, I suppose, is they've got to be ready. Businesses have got to be ready for the start of their financial year. And there are many, many reasons for that. And in fact, in our next podcast, we're going to go into a number of those reasons. And I guess on the flip side, those businesses that prepare early can gain an advantage over their competitors who are lax in approaching this issue. So a real advantage potentially to be gained there.
Absolutely.
Okay, well, I guess that's enough for us to digest for today. We've been fairly general, I suppose, in this podcast, and by necessity, I think it's the case that we're going to have to get into a lot more of the specifics and the detail. Tax, of course, it's the case that in tax, all aspects of tax, the devil is in the detail. But we hope we've whetted your appetite to learn more about this very important subject. Kirti and I will be back in a fortnight's time when we're going to discuss with you just how far the tentacles of CT reach into every aspect of your business. But in the meantime, We wish you a very pleasant day, and we hope to see you in a fortnight's time.
Thank you very much.
Thank you.